A little birdie in my ear told me that you're liking Sony right now. It's been a relatively busy time for them. You know, they're struggling to hit their PS5 targets. They've pulled out of this merger now, or want the Indian division with Z Entertainment. So where's the opportunity here? Where are you seeing the upside that would justify buying them at the price that they're at right now?
Yeah, I mean, we think that there's a lot of optionality in Sony. I mean, I just talked about the Mag 7, and tech was really the hot dot last year. But Sony's got, a lot of IP and a lot of development opportunities. I mean, one example is they had The Last of Us, which was first developed into a video game. Then they produced it into a TV series, which used, Sony music artists on the track list. And so I think there's a lot of synergies within the business, and they're shifting the business more to a recurring revenue business model via gaming, music, and pictures. We think that's going to improve the predictability, of the company and ultimately justify a higher valuation. In addition, we talked about Japan and how a number of companies in Japan, as rates have come up, as you're seeing inflation, it's actually starting to help them get their operating margins up. And we're seeing that with Sony as well. We think they can get some nice operating margin expansion through operating leverage through the content and IP development being shared among its multiple business units. So, we're excited about their potential growth opportunity going forward, and it's not a particularly expensive stock.
You, of course, think Samsung is the best way to play AI.
Well, it's maybe not the best way, but it's certainly a stealth way to play AI. Samsung's the largest tech company by revenue that no one really thinks about. They're in OLED, they're in phones, and the big thing, they're in memory. They're spending a bunch of money to build new chip fabs. And, if you think AI is going to really be a growth driver for years to come, that's going to drive a lot of demand for a number of Samsung's products, namely memory being a major one. And yet the preference shares trade at a little over book value, which is unheard of for a tech company. I mean, U.S. tech companies trade nowhere near book value, and about 12 and a half times earnings. In terms of the cycle, we do think that cycle will eventually turn, and so they could have a big boom in their earnings as well. So ultimately, we think it's a very cheap way to participate in AI, even if they're not directly involved in AI.